of New Zealanders. Mr Speaker, thank you.
Honourable David Parker.
Thank you, Mr Speaker. I rise to take a call on this urgent debate, which has been granted by the Speaker on the basis of there being an important decision forced upon the government, essentially, which is to delay their asset sales program. Mr Speaker, I want to reflect on some of the justifications that have been given by the government in respect of their underlying program for asset sales, and to try and show to the House and those who are listening how bereft of vision this government is for a development of our economy in a way that works for working New Zealanders, for those who need to earn a living in our country, for those who at the moment, sadly, increasing numbers of whom, because of the lack of hope in our own country, are departing for greener pastures in Australia, or at least more profitable means of sustaining themselves in Australia. Mr Speaker, the government at the last election said that they had to proceed with the asset sales because of debt problems, and yet they're now saying that even though they can't proceed at the same pace with asset problems, it doesn't pose a problem in respect of their management of debt. I find those two propositions inconsistent, and I think they always were wrong in saying this was about government debt, because of course the New Zealand government books are some of the best in the developed world, with very low levels of government debt, even after 4 years of deficits under this government. The prior Labour government, of course, is partly responsible for that, because we ran budget surpluses for 9 years in a row, reducing government debt from 48% of GDP. I see Tony Ryle laughs, but it's true. We reduced government debt, gross government debt, from 48% of GDP to 18% of GDP, and net government debt to zero, or it was zero until they changed the method of measurement and then revised it slightly above zero. But anyway, net government debt was close to zero, gross government debt was down to 18%. So the country does not have a government debt problem. We do have a private debt problem, and it's notable that the most central or most important part of the government's vision for this 3-year term does nothing to address the problems of New Zealand's private debt, and indeed there are a lot of other steps that the government could take to improve the economic outcomes for New Zealand, but one of them isn't asset sales. So by the time of the election, we had opposition parties saying that asset sales made the government deficit worse, but the government denied that at the time of the election. It's a matter of record now, and I think it's a somewhat shameful record that we're meant to have transparency of accounting processes in New Zealand in advance of an election, where the government's forced to open its books so that the public can see what is the true state of affairs. And on the opening of the books in the pre-election period on this occasion, the Treasury allowed the government to book the proceeds of sale of asset sales without accounting for the loss of revenue that would accrue to the government as a consequence of the sale of partial shares in some of these power companies and other SOEs. And as Andrew Little just said, it unbelievable, because it really was unbelievable that the Treasury was willing to sign off as fair accounts which showed capital coming in from the sale of SOEs so as to reduce future debt and future interest costs, without showing the loss of revenue which followed to the Crown. Absolutely abysmal practice, and something that the Treasury and the Minister of Finance, who signed off that pre-election fiscal update as well, they should both be ashamed of, because that really is a dropping of standards of public accountability that are meant to be better in New Zealand. So after the election, by the time of this first budget and this 3-year term of the government finally comes clean through the budget economic and fiscal update, which was released on the 24th of May this year. And in that, for the first time, the government acknowledged that its finances, its deficit, its government deficit, the operating balance before gains and losses, went backwards as a consequence of asset sales, not forwards, because obviously the price at which the private sector is willing to acquire assets, the rate of return they expect that's implicit in the price they're willing to pay, the rate of return that they expect is more than the government's cost of funds. And the Treasury explicitly says that in the Budget Economic and Fiscal Update. They say that the proceeds of sale from the sale of interests in these state-owned enterprises is not enough to cover the foregone profits, which is a combination of retained earnings and dividends. So the foregone share of profits is more than the government saves on interest. So they didn't need to do it from a government debt perspective. They persist because of no other reason other than ideology, because the other reasons that they push in favour of asset sales are similarly flimsy. They say that this will increase people's investment options in a way which will improve capital markets. Well, at one level that's true. It is true that there will be another investment that's available to people in the private sector, either privately or through their investment funds like KiwiSaver funds and the like. But really, is our private sector so inept that the only way that we can improve capital markets is to sell through public capital markets what the government has created? Is that really the vision that this government has for the development of the New Zealand economy? The only way we can improve the New Zealand economy is to sell what the government's already created? What a backward, uninspirational, unaspirational vision that is of private enterprise in New Zealand. Now, I am a believer in general in the efficiency of capitalism. And I want most businesses to be run by private sector rather than by the government. But I certainly think that infrastructure assets, especially those which have monopoly characteristics, as we have in the electricity industry, where we don't have a perfectly competitive market, I believe it is in the interests of New Zealanders that those assets remain in state ownership, because if there are monopoly rents being extracted, and I think there are in a lot of these infrastructure industries, then it's better that that monopoly rent effectively gets recycled through the tax system for the benefit of everyone, rather than exists for the concentrated benefit of what are essentially the most wealthy people in society, who end up owning disproportionately far greater share of those assets over time, in addition to overseas interests. So, Mr. Speaker, the idea that we improve capital markets by allowing them to trade what the government has already created is wrong, and it's especially wrong when it comes to industries where there are monopoly rents extracted. And if we think that this isn't a case here, let's reflect on the fact that New Zealand's electricity prices have increased at far greater than the rate of inflation for many, many years now, including under both the Labour government but also this national government as well. And reflect also on the fact, thank you Mr Speaker, reflect also on the fact that the analysis that's been done by Molly Mellish of Grey Power, I heard the Greens claiming credit for that, actually it was Molly Mellish of Grey Power that did that analysis, and it has been made public by other opposition parties other than the Greens. The Greens have been singing that same tune as well. She showed that the average amount that's charged by SOEs to a domestic consumer is $265 per annum cheaper. That net gap will narrow through privatisation of these shares. There's nothing clearer that if you increase the private sector disciplines, it won't just relate to cost minimisation, it will also flow on to price maximisation, and that gap will narrow. Mr Speaker, if this government was serious about economic growth, it will be doing things like introducing a capital gains tax so that people invest on the basis of the profitability of the investment rather than tax bias. It would be improving the depth of capital markets so that there are more money for businesses to expand and grow jobs in through universal KiwiSaver. It would be doing things to help control the rapid increase in our exchange rate rather than having the Reserve Bank focus only on inflation. It would be making meaningful steps to improve the outcomes of our economy rather than having as a central part of its vision a policy such as this, which is failing. Reflect on the fact that at the last election, the most important part of the national government's vision for this 3-year term was asset sales, and that's now held up.
The Honourable Tony Ryle.
Mr Speaker, this is a